Hi, I'm Jessica Amir with the Finance News Network, here with VLW CEO and Managing Director Craig Treasure. Hi Craig, welcome back.
Thank you. It's great to be back to update on our results.
Maybe you can tell investors new to the company about your value proposition.
What's different about our business is our core turnkey housing product, where we deliver to the buyer the completed house in the completed street. They know what they're going to get, and we make it easy for them with a single deposit and a single contract, which makes it easy for their financing. So that's the real essence of the VLW business and its success in the markets.
How did your first half 2018 wrap up?
A really good profit result for the first half, so 17.3 NPAT, and we're tracking really nicely on our full year guidance of 41.6. So for the half it was 13.6 cents per share, which again is tracking nicely to where we want to be for the full year of 32.8 cents per share. And our NTA at the end of that period was $2.31.
And Craig, what was the dividend?
Dividend declared for the half year was 8 cents per share, and again we're forecasting to deliver at least 18.5 cents per share for the full year.
And can you give us an update on first half 2018 sales and margins?
Sales have been very strong for the business again, so we recorded 715 sales for the period, which is nicely on target for our forecast 1,400 sales for the full year. We've been fortunate to have a lot of significant flagship projects start to contributing during that period, and we're envisaging a stronger second half in the marketplace. Our margin across those sales tracked for the first half year at 24.5%, which is nicely within the guided range of 24 to 26%.
So what drove those stellar results?
Sales for us are different in different states. So the Sydney market, here where we are today, a steady market. We bring product to the market and it's selling well. Melbourne is an extremely strong property market in the greenfield house and land area that we operate in, and Brisbane is a market that's undervalued and steadily improving for us.
Craig, now to your portfolio, just tell us about your key projects.
Certainly. During this period we've commenced selling at a number of flagship projects. Some of those, for example, in Queensland are the Meadows at Strathpine, an ongoing house and land project, Covella, our joint venture in Greenbank in Brisbane, and Lilium, a large land estate in the southeastern suburbs of Melbourne. So it's good for VLW to be back in those flagship projects that will run for some time, rather than smaller projects that we've had a lot of in recent years.
Now to your acquisitions and disposals, can you update us on that?
Certainly, acquisitions are an ongoing part of the business, and as we've said to the market, we're continuing to grow our partnering and joint ventures here in Sydney. We've been able to be a little more selective in acquisitions through this year because of the restocking we've done previously, and you've seen a number of those settlements come through in the half year that we're just reporting on. Our view is to continue to grow in Melbourne with structured transactions and reinvest capital going forward predominantly into the Queensland market. Also of note, a major disposal that we announced in December with our Donnybrook property, which is an opportunistic sale of the property subject to the planning outcomes, and the revenue and profits from that transaction will be booked from financial year 20 onwards over a period of time, and maybe as soon as FY19 and the last period of that year.
A more general question now, with people living longer, how does that really change what type of properties people are looking for?
Sure, we're continually seeing the markets change. The big change that we've seen in our space is the size of blocks of land and the size of homes getting smaller, and that's predominantly around affordability. But to your point about the ageing demographic, we are seeing more and more customers come to our houses where people are downsizing their traditional home. It lets them pay some money off their mortgage or pay out their mortgage, do some travelling and have a smaller home that's lower maintenance. And for a lot of those people it's quite exciting because often it's the first new home that they've ever owned. So they're a growing customer that we're seeing in our product range.
And Craig, just remind us, what's your guidance for the full financial year?
Sure, guidance for the full year is 41.6 million NPAT. That equates to 32.8 cents per share in earnings, and we're guiding for a full year dividend of at least 18.5 cents per share, which represents around a 7% fully franked yield for our investors.
Well, Craig Treasure, thank you so much for the update.
Thank you. We look forward to being back to update at full year results.